Is there a difference between the type of loans that a buyer is using when buying a house, and should you take that into consideration when you are accepting a contract? Yes is the short answer. The longer answer is a little bit more complicated. The thing about the contract to purchase a property is that it's always contingent if there's a mortgage. It's telling you, I will buy your house if X lender loans me the money and approves me under these terms, right? If the terms of that contract or that mortgage are too strict or too difficult, and the buyer winds up not having sufficient funds, or the lender finds another problem in the process, they can deny the loan a few weeks or a month after the contract signed, and at that point the buyer can walk away and you have to give them back their earnest money because it's through no fault of their own that they're not purchasing the property. So bear in mind that when you receive the contract offer, see what type of loan is being given. See who the lender is. If it's a cash purchase, you want to see proof of funds. That can be in the form of a letter from a bank saying that the buyer has sufficient funds to pay X amount, or even just a copy of a bank statement. It can all the pertinent private information can be blacked out. All you need to see is that the balance in there is high enough to actually pay what they're making an offer. And generally, a cash offer is the most secure because there is no contingency. They're telling you, I am buying this house. Assuming that there's no inspection contingency, which they would still be allowed to inspect the property and make sure that they want to move forward after that. So a lot of times it behooves the seller to maybe accept the cash offer that's a few $1,000s less than a mortgage offer because it is more secure, and generally speaking you can close on that deal much faster, typically as soon as a week and a half to 2 weeks, instead of the 3 to 6 weeks that it may take to close on an offer with the mortgage. Then there's different levels. Another thing to consider is whether it's a conventional versus an FHA mortgage or VA mortgage. Conventional mortgage basically means that there's less restrictions because it's not backed by mortgage insurance or by the Department of Housing and Urban Development or by the VA if it's a VA loan. Those loans are slower and a little bit more restrictive because there's other requirements that not only the loan, the buyer, and the property but also the property have to meet under the terms of those loans, and if one of them is not met, the loan can be denied, as we said, a few weeks later, and you're back at square one looking for a new buyer. Conventional loans don't have a lot of those restrictions, so typically they're a slightly better advantage of those types of loans because they don't look at all they're looking with regards to the property is its value, not its condition or other items. Then there's the consideration of who is the lender. Right, the contract requires that the buyer tell you who their lender is, and they have to generally they provide you with a pre-approval or pre-qualification letter. If the lender is someone you never heard of, maybe do a Google search to see their reviews. They have horrible reviews of people saying that they cancel loans at the last second. Maybe you don't want to accept that contract. If it's a lender that you're familiar with and you know that they do good work, or your agent tells you that they worked for them in the past and that they do great work, then you can have a little bit more confidence in that transaction. Then you also want to take into consideration the terms that they're telling you. If they're saying that they want to be contingent on them being approved for an interest rate under 3%, and the current interest rates are 4 to 5%, then it's a little bit unrealistic, and the chances of them being approved for that amount are unlikely. Doesn't mean that you have to reject the offer. You can always make a counter offer and tell them, hey, I like your offer otherwise, but you're saying 3% and the current market rates are 4 to 5%. So how about we change that to 4.5 or 5%? And if you agree to that, then I can accept your offer. So these are some of the items that you want to be aware about when considering a buyer's lender, the buyer that they are proposing to use to buy your property. And you are free to say, you can't make them use a specific lender. You can't say, I want you to use Chase, or I want you to choose Bank of America, or I want you to choose XYZ Bank, but you can just reject the offer and say, you know what, I've done some research on your lender and they're horrible. I'm not accepting this contract. If they then come back and say, we'll use a different lender, then you can start the review process again and decide whether it's something you want to move forward with or not. Another important thing to keep in consideration is take a look to see whether it's a pre-approval or pre-qualification letter that they've received, because there is a difference. And there's a video below where we'll talk a little more detail about what the difference is between the two. So I hope you found the information in this video useful. Bear in mind that it is general information, not specific to you, your contract, or your property. You should consult with an attorney. And we recommend that you can hire an attorney for the sale of the home, because it is a complex and difficult process, and there's a lot of liability involved. Bear in mind that you pay the attorney's fee, so that means that you get to choose whoever you want to hire to be your attorney. If you want the attorneys at Robson and Lopez LLC to represent you, have your agent or broker send us a copy of the contract and give us a call today to get the process started. Bear in mind, no one can tell you which attorney to hire.